Bismillahirrahmanirrahim. Assalamualaikum to everyone. Welcome to the online class of contemporary taxation. Today we are conducting our 27th lecture and I'm your instructor Saba Naqvi. इसके 8 पॉइंट्स आज हम स्टार्ट करेंगे एम्प्लॉय शेयर स्कीम कि एम्प्लॉय शेयर स्कीम में क्या क्या आता है। और एम्प्लॉय शेयर स्कीम मीन्स एनी एग्रीमेंट or arrangement under which company may issue shares in the company to an employee of the company and employee of an associated company or the trustee of trust on an employee of associated company. Right and option of acquired shares. The value of right or option of acquired shares under any employee share scheme granted to an employee shall not be chargeable to tax because no benefit in the form of salary shall be received by the employee unless disposable of right or option. Disposable of right and option of required shares where the employee disposes of or right and option of required share under an employee share scheme, the amount chargeable to the tax to the employee under the head salary for the year shall be included the amount of any gain made on the disposable shares issued without limitation or restriction. Where employee is issued share under an employee share scheme, the amount of chargeable to tax to the employee under the head salary for the year shall be include the fair market value of the shares at the date of issue or reduced by any consideration given by the employer for the shares, including amount if any given for the grant of right or option of acquired shares. Shares issued subject to limitation or restriction. पहले वाला जो था वो शेयर्स विदाउट लिमिटेशन इशूड विदाउट लिमिटेशन और रिस्ट्रिक्शन था. अब जो है शेयर इशू सब्जेक्ट टू लिमिटेशन एंड रिस्ट्रिक्शन. If the share issued to employee under an employee share scheme are with restriction or transfer of the share, no amount shall be chargeable to the tax employee under the head salary until the earlier of the time the employee has a free right to transfer shares or disposes of the shares. And the B point is the consideration. B point is the amount of chargeable to the tax to employee shall be fair market value for the share at the time the employee has free right to transfer the shares or disposable of the shares, reduced by the consideration given by employee for the share, including amount, if any, given for the grant of the right and option of acquired the share. Next one is the cost of share. There is 3 points. The cost of share. The cost of share to the employee shall be sum of the consideration, if any, given by the employer for the share. And B point is the consideration, if any, given by the employer for the grant of any right or option of acquired the share, and the amount of chargeable to the tax under the head salary. Now next one is the retirement benefit. Retirement benefit available to taxpayer following gratuity, superannuation fund and the provident fund. सबसे पहले gratuity क्या होता है? Gratuity is the sum which is paid at the discontinuance of employee to the employees computed by applying the total number of years services of the employee will be determined every amount of salary. Gratuity conditional exemptions. यहाँ पे कुछ gratuity conditional exemptions है. Number 1 is in the case of any employee of government, local government or corporation established by or any law for the time being in force, the amount receivable in the accordance with the rule and condition of the employee services. And the second one is the number any amount receivable from any gratuity fund approved by the commissioner in the accordance with the rule. And the C point is the in case of any other employee the amount exceeding rupees 3 lakh receivable under any scheme applicable. All employee of the employed and approved by the board for the process of this. Pension क्या होती है? A taxpayer receive a pension has not been allowed any option for taxation at average rate the last 3 year income. The most important feature of this payment is most important of pension or exemption for the levy of tax. Next is annuities. Annuities is any supplement of the annuity or taxable salary, even it is paid voluntarily without any contractual obligation of the present or ex-employee. Superannuation fund. The amount of superannuation fund is taxable to extent employee contribution and the interest credit thereon. However, this ordinance deals with the exemption of aforesaid law in the following manner. Benevolent fund. Sum paid out of employee benevolent fund is taxable in the normal manner. However, the benevolent fund grant paid for the benevolent fund to the employee or member of their families in the accordance with the provision of Central Employee Benevolent Fund and Group Insurance Act 1969. Next one is the Provident Fund. Provident Fund is from the salary of employee. Certain amount deducted every month or on the account of Provident Fund. Employee also contribute the same amount in the Provident Fund at the time of retirement of the employee. The accumulation balance in the Provident Fund consisting of employee's contribution and interest on fund is the paid to employee for its benefit. There is the three types of Provident Fund. Number 1 is the Provident Fund formed under the Provident Fund Act 1922. Recognition Provident Fund under the Income Tax Ordinance 2001 and unrecognized Provident Fund under the Income Tax Ordinance 2001. Provident Fund formed under the Provident Fund Act 1925. The formed under the provisions of Provident Act 1925 is also named as statutory fund. Such type of fund is generally formed in the federal government, semi-government institutions and local authorities. In this type of fund, subscription and dispose for any classes of employee or receive and the head on their individual account. An individual any contribution in any interest increment occurring on the such subscriptions, deposit or contribution under the rule of this fund. Next one is the second point is the recognized Provident Fund under the Income Tax Ordinance 2001. The Provident Fund organized by CIR is called Recognized Provident Fund, and if it is not recognized by the CIR, then it is called Unrecognized Provident Fund.